Hello and welcome to the Theo Night Report for Tuesday, October 18th. My name is Doc Severson. I'm going to start out tonight's report on the NQ, which is the NASDAQ futures chart, and I'm going to pick on this weekly chart here and kind of zoom in on this. And what we're seeing is the same type of pattern in decreasing scale. All right, so after consolidation, we see a big move down at the beginning of the year. Okay, so this is how things started at the beginning of the year. We rally up from here in a slingshot move. We consolidate. At that point, we sell off again. This time this was for the Brexit move, and then we rally from here in a big slingshot move again, and then we consolidate. And then we pull down and rally above that point and then consolidate. Okay, what I want you to see is that we're doing kind of the same pattern again and again and again. We start off with a big move down, rally up through a slingshot move, then consolidate. Well, what you're noticing is that each of these sell-offs is getting shorter. It's getting shorter and shorter and shorter. And we just had one. I wouldn't exactly call this a sell-off. It was just a few days of distribution. But each one of these is getting shorter and shorter and shorter. And what we're building is kind of this sort of rising wedge. Now, what I've seen really since around the 2013 timeframe especially is that we're getting these rising wedges. We're getting these rising wedges here, but they tend to break out to the top. Rising patterns are supposed to break down to the downside, but we're getting them breaking out to the top first before we see weakness come in probably sometime later. So that's the normal pattern that we've seen for the last several years. If we do instead, though, break to the downside, we have to take that seriously. And what we could be seeing in earnings is maybe telegraphing this. The problem that I keep bringing up is that the market is buying the dips. So when we have a dip, when something comes along to create fear in the market, something that was not priced into the current mix at that time. So some catalyst comes along and when in doubt, palms out, right? Sell. And these catalysts are coming along and the market's becoming more immune to them and doesn't care. But we're not buying the highs. The only time that we're seeing higher prices is after one of these dips. And eventually people are just going to stop buying the highs here and just let it, we're going to turn into a buyer strike. And this is why we're going to have to watch this very carefully here to see if this trend line, even though this is somewhat sloppy because of the Brexit low here, but this trend line, if this is broken to the downside, we have to take this seriously. And we could be starting to see something where we retest perhaps this level down here, which is support, because there really is nothing below there. And we have the same thing for the S&Ps. We have the same thing for the Russell. We've been in this mode for months now in this low volatility funk. And something is going to break this out very soon. Now, it's probably not something that everybody's anticipating. So everybody's anticipating, oh no, if this happens, then this is what's going to happen in the market. Rarely does that occur because the market's already factored in the risks of those events already. It's usually something coming in from left field that nobody expects, which the risk comes in. So right now, I would still have to say that unless we see this market break to the upside again, but what's going to change that? What's going to change that? The market has not behaved in that manner. Nobody's been buying the highs all year long. So to me, the character still remains with some kind of catalyst coming along, breaking the price to the downside out of this ascending wedge pattern. Now, secondarily here, I'm bringing up some individual stocks here that have just reported, such as JP Morgan reported the other day, nice big gap up, but then it's all been faded. It's all gone again. Another little gap up from Goldman Sachs this morning, but it's just about gone again. So the market's not really respecting this. It's already priced in these. Nobody's buying the highs at this point. So we have the same thing going on with Wells Fargo, is showing the same thing from the gap up the other day. It really hasn't done much since that point, as well as Citi. There's Citi. All the gains are just about gone. So Goldman, got a nice move this morning, but it's only a matter of time before this gets pulled back down again. So even tonight, Well, this morning we had Netflix, which was just a huge move, right? So big move, 20% bounce off of Netflix. And then to finish up, after hours today, we had Intel, which bombed. So Intel doesn't move around a whole lot, but we've moved down a couple percent here with Intel. So not well received, has eaten most of the gains from the NASDAQ today after hours. So when we put this all together, we're seeing a market where the highs are not being bought. The only way that anything's moving whatsoever is after a decent pullback, creating a negative environment, which is usually overbaked and gets reversed to the upside, right? So the only way the market's going higher is taking one step back to get two steps forward. So that's point number one. Point number two, we're in a rising wedge on the Qs, a rising wedge on the NASDAQ right now. So watch for a break to the downside on there, because rising patterns do eventually break to the downside. And then number three, earnings, even if they're good earnings, they're really not getting anything anywhere these days. So they're really not serving as a big positive catalyst because, frankly, fundamentals have been tossed out the window. Nobody really cares anymore. And one last thing, don't discount the risk of the U.S. Senate and the U.S. House being flipped, because right now what the market is pricing in is that there's going to be no change to those. If one or both of them gets flipped, that's going to upset the entire apple cart, much more than the presidential race, the winner of the presidential race will, because that really creates uncertainty when all of a sudden we're dealing with a different mix in Congress. So again, that's one of those obvious things that honestly not really too many people are talking about right now. They're all focused at the top, where I think the bigger risk lies at the bottom with the House and the Senate. So that is it for today's report. Thanks for listening, folks. We will see you tomorrow.